I would like to discuss the power of social trading, how to leverage other people's strategy for success, how to leverage other traders' strategy for success. Social trading is an innovative investment strategy that allows individuals to observe and follow the trading behavior of experienced investors, often within a social network or a platform dedicated to trading. These people, you could mimic the trading behavior of an experienced, more successful, more profitable trader. So this approach combines elements of social media with financial trading, enabling users to learn from others, share insights, and even automatically replicate the trades of other successful investors. So the key concepts here are: number one, social trading platform. Social trading platforms. These are online platforms or networks that facilitate social trading. They provide users with access to a community of traders where they can view the trading activity, performance, and strategies of others. Popular platforms include eToro, you have Zulu Trades, and you have TradeDo. This platform gives you uh, a means of identifying and as well as copying the trades of successful traders within this platform and network. Number two is copy trading. One of the most significant features of social trading is copy trading, where users can automatically replicate the trades of selected traders in real time. This allows less experienced investors to benefit from the expertise of more seasoned traders without having to make trading decisions themselves. You simply copy what top traders in the industry are doing, what top traders are doing in the industry. Number three is leaderboards and profiles. Leaderboards and profiles. Social trading platforms often feature leaderboards that rank traders based on their performance, allowing users to easily identify top traders to follow. Detailed profile include information on a trader strategy, risk level, as well as historical performance. Number four is transparency. Transparency. Social trading is built on transparency, with platforms providing access to detailed statistics, past trades, and risk assessments. This enables users to make informed decisions about which trader they wish to follow or to copy. Number five is community interaction. Community interaction. So in this regards, users can interact with each other through comments, messages, and forums. This social aspect allows for the exchange of ideas, strategies, and market insights, fostering a collaborative environment. The people are there to collaborate, to share ideas, and to see how they can benefit one another, within the community. Number six is risk management. While social trading can be an accessible way to invest, it also requires careful risk management. The users need to be mindful of the risks associated with copying others, as even top traders are expected to make mistakes and even incur losses. So as you copy, bear it at the back of your mind that the person you are copying is not perfect. The individual could make mistakes. The individual could sustain losses, which will invariably translate into your own performance as well. you have the strategy approach. The strategy approaches that is that are adopted in this kind of trading. Number one is choose traders to follow. You choose traders you wish to follow. So users select traders to follow based on their performance metrics, risk profile, trading style, and other factors. It's essential to consider whether the trader strategy aligns with the user's own risk tolerance and investment goals. Does this strategy does it align with your risk tolerance as well as your investment objective? If it does, you can go ahead and then choose that particular trader. Number two is diversification. To reduce risk, users might follow and copy multiple traders with different strategies, asset classes, or market focuses. This diversification can help mitigate the impact of any one trader underperforming. Number three is engagement and learning. Engagement and learning. Social trading is not just about copying others, it's also an opportunity to learn. Users can study the strategies of successful traders, ask questions, and gain insight into market movements and trading tactics. You don't just need to copy. As you're copying, make sure you're also learning, you're studying, you're acquiring skills and and knowledge that will help you hereafter. That will help you in the future as a trader or as an investor. Number four is monitoring and adjusting. Users should regularly monitor the performance of the traders they follow and prepare to make adjustments if a trader's performance decline or even market condition changes. You don't just follow somebody continually. If his performance declines, then of course you have to really sit down and adjust as necessary. When it comes to social trading, it has its advantages as well as its pitfalls. I want to look at the advantages of social trading. Number one is accessibility. Social trading makes investing more accessible to beginners by allowing them to leverage the knowledge and experience of seasoned, experienced traders. Number two is a learning opportunity. Learning opportunity. Users can learn trading strategies and market analysis techniques by observing and interacting with experienced traders. We equally have community support. Number three is community support. The social aspect provides a supportive investment environment where users can share insights and discuss strategies with like-minded individuals, with other fellow traders. Now, under the challenges, the pitfalls, you have number one, risk of over-reliance. Risk of over-reliance. So relying too heavily on copying others without understanding the underlying strategies, the fundamentals, can be risky, especially if the copy trader, if the copy trade starts to underperform. If the trader starts underperforming, what do? That's a typical risk attached to this. Number two is platform reliability. The success of social trading depends on the reliability of the platform and the accuracy of the information provided. Users must trust the platform to execute trades accurately and be transparent as it relates to the information it's providing about the trader you wish to copy. Number three is market volatility. If even top traders, can experience losses. Definitely they do. So especially in volatile markets, so copying trades, does not eliminate the inherent risk of trading. Even if you copy the best in the industry, that risk is always there that you could lose money. And mind you, statistics shows that over 90% of traders don't make money. They don't make money consistently. That is the statistics. So who is it for? Social trading is ideal for beginners and intermediate investors who want to engage with the market but may lack the time, the experience, or the confidence to trade independently. So it also appeals to those who enjoy the community aspects of trading and are eager to learn from others. So these are the people who will conveniently adopt this particular strategy.